In this clip, the CEO of Hidden Road drops a lot of alpha. Jake Claver and Paul Barron talk about the price of XRP as well. There is a lot of different information from Rob Cunningham about why the XRP ledger is setting itself up to be the world's payment system. Kevin Cage says people who use XRP, pay attention to this. I'm going to tell you everything you need to know about this. Let's get it. Now let's move on to the Rogers Innovation Adoption Curve, which I'm sure everyone has heard of. Everett Rogers made this idea famous in his book, Diffusions of Innovations. I'll quickly go over it again in case people aren't paying attention. This is the most important thing that early and mid-stage investors think about when they think about the world. And for example, it shows how different groups of people use technology at different times. It's the main empirical concept used to explain how people use technology. It's the basics of venture capital investments. Go through it quickly. The concept says there are 5 groups: innovators, early adopters, early majority, late majority, and laggards. Quickly, where are you? You've been here since the beginning, right? Have you bought XRP here for the past 10 years? Have you recently gotten in like I have in the last few years? Early users, right? We're here before both the early majority and the late majority. Innovators and early users are the first people to use new technology. They do this because they are interested and willing to take risks. There are likely a lot of people in this room and at this meeting. The early majority and the late majority are the bigger groups of people who wait until the technology is more mature and has been tested. And laggards are the last ones to accept and usually don't like change. In this case, that could mean the governments, the authorities, or the banks. So I thought it would be helpful to offer some background on where we are. So where are we with this? We're in the green area. It's clear that we still have a long way to go before full adoption. It also lets you know that we're past the early steps. What this means is that people are giving up the idea that this is some kind of trick. It's true, you know. Also, if it's true, we still have a long way to go before this becomes more common. Along with that, it tells you that adult users, not early adopters, wait until there is a lot less risk in adopting. So before they go live, they will expect the market system to be fully developed, well-known, and open. The good news is that's exactly what's happening, and a lot of people are working toward it. As I said before, when I think about how other markets have changed and grown, such as electronic trading, foreign exchange, brand brokerage, and interest rate swaps, you can literally point to the curve that shows where those businesses were at different times and look at certain traits to see if they match that graph or not. There are also some claims that AI will change this curve of technology acceptance. I agree with that point of view, definitely. We can expect a huge speed up in the uptake of technology. In this case, Rogers' innovation curve is slowed down as they make complicated goods easier to use with the help of AI-driven systems. AI can also make goods more personalized from the start, which means that early adopters can get value right away. And finally, I believe that the technology acceptance curve is something we should study to see how blockchain and digital assets change over time. It's possible that AI will help digital assets grow faster and the market structure mature so that they can formally join other types of assets. However, I do believe it is important that we follow the same rules and practices that we've seen in TradFi markets, working together with the world's countries and regulators. And so at Hidden Road, we've said from the beginning that we believe crypto is the 7th most flexible asset class that can be invested in. It's good news. A lot of people now talk about it in the same way. 6 types of assets are where investors, both individual and institutional, put their money. Crypto is certainly the 7th, after stocks, bonds, credit, rates, commodities, real estate, and cash. Those changes will cause trade and investing in that asset class to follow the best practices set by other asset classes. This will include things like best practices, clear ownership, and credit for money. The trade function will also have to be kept separate from the holding and collateralization function. Larger middlemen will want to get into the market to provide specific low-cost services. That means that some of those are the prime brokerage side to bring in money, and more market makers to lower the cost of delivery. And I believe that the bigger, more regulated private brokers will be able to better help the individual investor. A few years ago, none of this was given, but the world is moving in that way very quickly. Okay. Lots of things here. We hope that the XRP system will be used to settle and trade the $3.5 trillion that Hidden Road handles every year. RLUSD is 90% on the Ethereum ledger and 10% on the XRP ledger. They want to use it for a lot of these things. You would think that the Ripple team would get this and say, hey, let's add more value to the XRP side of RLUSD. And that's what we want to happen here. There are more activities on the ledger. That being said, if they happen on Ethereum, it won't help us at all. You need more liquidity, though, if you want to be able to serve all of the world's markets. markets, stock markets, bond markets, derivatives markets, all of these are coming on chain. As sandbox tests by banks become more common, regulators are becoming more at ease with them. This is why we are seeing them slowly creep in, and banks are already having trouble with the bond market in the US as they start to use this technology on a large scale. I saw losses in the bond market of more than $100 billion just in the second quarter. Banks need to find a new way to cut costs. AI and digital assets are the two best ways I can think of for banks to save money right now. Going from old systems to blockchain systems is going to be a big change that will happen over the next 6 to 12 months, and maybe even longer. Of course, if officials and governments around the world can agree on a set of rules and laws that apply to everyone, then value can move freely around the world. This is how we can add $100 trillion worth of assets to the chain in the next 10 years. The time it takes to do everything will be much longer if we are slow to move and don't work together. Okay? Listen to Paul Barron and Jay Claver talk about the price of XRP. Let's talk about it. Again, I have a full idea about how prices get so high, but it's a bunch of different factors coming together to make the perfect storm. If it's just the ETFS, I guess, let's do the very least.